In modern business, transactions feel instantaneous. You finalize a deal, hit send on a PDF invoice, the client wires the money, and the books are closed. It looks like a highly efficient digital exchange. But there is a critical blind spot built into this process. The government and tax authorities will not see any record of that transaction for months, and in many cases, they might never see it at all. This delay creates a tax gap, the multi-billion ringgit discrepancy between the taxes a country is legally owed and the taxes it actually manages to collect. Bad actors exploit this exact lag. By relying on fragmented paper trails and easily manipulated PDF documents, businesses can generate fake invoices to artificially lower their income, effectively evading both corporate tax and the sales and service tax. A government cannot accurately manage or forecast a national economy if its foundational commercial transactions remain invisible and unverified. Malaysia is actively working to transition into a high-income, tech-driven nation through its My Digital Blueprint. Yet, a futuristic economic ambition creates friction when the businesses driving it still rely on disconnected paper records to report their revenue. To solve this, the Inland Revenue Board of Malaysia, or LHDN, designed a radical new policy. They set out to permanently close the reporting loophole. To build a digital nation, the government realized it had to systematically phase out the traditional paper invoice. They replaced post-event reporting with a continuous transaction control, or CTC, clearance model. Under this architecture, businesses can no longer just email a PDF. The invoice data must be structured in XML or JSON format, and it must be routed directly into LHDN's My Invoice portal, or through an API integration. Once the data hits the hub, it undergoes real-time validation. In under 2 seconds, the system verifies the tax IDs, the formatting, and up to 55 required data fields. If the data is clean, LHDN clears it. They stamp the data packet with a unique identifier number and a specific validation QR code and send it on to the buyer. Only after this near-instant interception and stamping is the document considered a legally compliant tax document. This CTC architecture converts the private receipt into a verified data point for the tax authority. This official Inland Revenue Board FAQ document shows exactly how the policy is rolling out. Implementation is phased by a company's 2022 fiscal revenue, starting with massive corporations earning over 100 million ringgit and scaling down to SMEs earning 1 million ringgit by 2026. As this LHDN exemption flowchart illustrates, micro, small, and medium enterprises under that 1 million ringgit threshold are currently exempt, provided they are entirely independent and not a subsidiary of a larger mandated company. But for high-volume or complex industries, the mandate applies strict oversight. Typically, small B2C transactions can be batched into a single monthly report. However, certain sectors are subject to a strict no consolidation rule. The construction industry, for instance, is explicitly barred from consolidating invoices. With layered contracts, every individual progress claim must go directly to My Invoice. To prevent fraud in high-capital sectors, generalized batch reporting simply isn't an option. The system requires absolute transaction-by-transaction visibility. This circular from the Malaysian Bar highlights the financial risk of ignoring these rules. Failing to issue a verified e-invoice carries severe penalties, resulting in fines ranging from 200 to 20,000 ringgit for every single unverified invoice. To offset that risk, the Madani administration announced a 1.5 billion ringgit public-private financing boost, specifically designed to accelerate digitalization. Smaller businesses are being offered direct financial incentives to make the leap. This includes 5,000 ringgit digitalization grants, accelerated capital allowances for new equipment, and special tax deductions up to 50,000 ringgit to cover software and tech upgrades. Forcing a rapid, nationwide behavioral shift requires balancing significant financial risk with heavily subsidized technological upgrades. Once all phases are complete, the government achieves something it has never had before, a real-time X-ray view of the entire national economy. This centralized data lake will allow LHDN to conduct instant audits, identify evasion the moment it happens, and eventually provide businesses with automatic, pre-filled tax returns. And by adopting international frameworks like PEPL, this domestic system connects directly to global trade, allowing for more seamless cross-border commerce. By standardizing how every transaction is recorded and shared, Malaysia has integrated the invoice as a core data source for its national tax infrastructure.